Standard & Poor's today, it downgraded 7 Italian banks over their sovereign debt risk. S&P just yesterday downgraded Italy's sovereign credit rating. And earlier today, the International Monetary Fund said it sees a $410 billion risk to Europe's banks. Also, European countries with sound economies, they are growing a little bit more concerned that they might not be immune from this spreading debt crisis. My next guest, Thomas Mirow, he is the president of the European Bank for Reconstruction and Development, joins us now for his thoughts. Thank you very much for joining us. Appreciate you having you here. For those that don't know exactly what the European Bank for Reconstruction and Development is, explain a little bit about your role and the kinds of loans and the kinds of economic activity that you're supporting in Europe.
The bank has been founded 20 years ago upon the fall of the Iron Curtain. What we are doing is investing into the real economy in Central and Eastern Europe, including Central Asia and Turkey, and probably very shortly so also in the Middle East and North Africa. And what we do is take small amounts, relatively small amounts of public money, of taxpayers' money, and try to attract private investments. So we are different from most of our peer institutions as we really focus on the private sector.
Now, what about your bank's balance sheet right now? That's got to give us a little bit of a hint as to what you feel about the creditworthiness of sovereign debt in Europe.
Well, so far we have done a very good job. Last year we had a net income of 1.4 billion euros, so approximately $2 billion on a balance sheet of 40 billion euro, so something like $60 billion. But of course, if shares plunge, if assets diminish in value, then we also take a hit at our own balance sheet.
Do you hold large amounts of sovereign debt on the balance sheet of the European Bank for Reconstruction and Development?
No, we don't.
None.
No.
And what about short-term money market funds, for example? Neither. So do you have any faith in the ability of countries such as Greece to repay their sovereign debts?
It will be very difficult. The Troika is bound to come back to Greece next week, so we will hear what they really see and think and have found out. But yes, for an economy of the dynamics or lacking dynamics of Greece, to bear a debt of 150% of GDP is extremely difficult.
Now, from your experience as a banker, does the math make any sense? Is it possible that the bondholders, they have to take a haircut because the numbers just won't work in their favor?
Well, I think there has already been one operation involving the private sector. We will see to which degree this will really work. In the end, it cannot be only taxpayers' money which is at stake. And I also do think that Greece is a very special case, quite different from Spain or Italy, for instance.
What about the relationship between the banks in Europe and their partners overseas, the ability of banks in Europe to access overnight and low-cost capital?
Well, we have seen that some of the European banks had difficulties to get to the dollar funding in the way they are used to. So the central banks in many places came to support them. And I mean, what is totally clear is we have an inextricable link between sovereign and bank risks. So if sovereign risks materialize, then it has an impact on the bank. If banks are getting in difficulties, it takes a hit on the sovereign debt sheet.
Would you like to see different policies to foster growth in Europe?
I don't think that we can hope in the short term for any improvement. My sense is financial markets do look too much at short-term solutions which are not in supply. We will need to embark on more deeper structural reforms, and then we will have a payoff in some years from now.
Speaking at the Clinton Global Initiative today, the president of the Czech Republic, Václav Klaus, he said he doesn't see a solution to the Greek debt crisis as Greece remains inside the Eurozone. Should Greece get a timeout for being a Eurozone member?
No, I don't think so. The Czech president always has been a critic of the Euro area. As soon as Greece would leave the Eurozone, it would immediately invite to speculations if other countries would be to follow.
What about the collateral issue? Countries such as Finland, even the Netherlands, Austria, demanding collateral to offer more money to support Greece.
If I have been well informed, this issue has been tackled at a conference last weekend among European finance ministers and has been solved, that it is really constrained to Finland and that Finland is taking some reduction in its interest rates in return.
I want to thank you very much. Thomas Mirow, he is the head of the European Bank for Reconstruction and Development. Always insightful. Thank you very much for your thoughts.